Monday, August 19th, market analysis. Stan Ehrlich. Good morning. A little after 10 o'clock California time. I start with stock market indexes and go to futures and sometimes go to things like seasonality, cycles, crypto, variety of other things. E-mini. Now, you guys know I had a buy signal on the exact bottom of the market. Yeah, what happened to my crosshair here? And on. Whoops. Just a second. Local. That's what I wanted. Very good. On August 8th, and we are still long. There has been no downside correction sizable enough to stop us out. Our trailing stop is always the yellow dotted line, either below a bull trade, and if it's a green line, we're making money, and that green straight line is called the trade line. It connects the entry price with the current tick, which is high and last. This is turning out to be a whopper of a buy signal and a great signal. Now, that's the strategy. It's doing great. Automated 100% ER signals. Opinion, my opinion, of course. We're getting close to overbought at 72. That is close to probably a top. Maybe we'll get something that we can call a double top. If it shoots up here in the next day or two and gets to 75 RSI, then I'd be screaming bloody murder. Watch out. Now, I have been saying that off and on for the last week or so, because I was not expecting these various resistance areas to be challenged necessarily or broken, which all of them have been broken. The market has come up to and through those resistance areas. So now I've got very little as far as support and resistance to work with, except for previous highs and a small trading range that we had in early July. Nevertheless, I still think this market is not necessarily going to make new historic highs, and I completely expect a substantial downside move starting very soon down into October. So I've got about 5 weeks approximately until October. About 6 weeks. Next, we got the short-term chart on the E-mini. Shows you to the 5-minute mark where we got long. Our trailing stop on a 5-minute basis, which moves inside every day. If prices go up enough or down enough, our trailing stop moves to protect less of a risk and more of a profit. In this case, of course, much more of a profit. And we've already moved up once or twice this morning on our STS Smart Trailing Stop. Next, Spider. We got oversold, but we never got a buy signal at the bottom on the SPY because the trading hours are different, and therefore we didn't get a buy signal on August 8th, unfortunately. But in E-mini we did. Now, the SPY did have a head and shoulder top, and within 2 days, that pattern which I outlined, pointed out, told you what was supposed to happen and where it was supposed to go down to, it took 2 days to go down to its minimum downside objective almost exactly. Rarely is it that accurate. And now we've got to move all the way back up very close to historical highs. Again, RSI is 73, very close to 75, which it could reach today if we get a little more strength. We're getting closer and closer to a turn down, in my opinion. Next, SPY 5-minute chart, still chugging its way up into new highs. The RSI on a 5-minute basis is not relevant in this situation. QQQ, RSI 71, in a resistance area, trying to close an old gap that was from July 23 to 24. There's another resistance area and another gap a little bit higher. Somewhere in here very soon, I am totally expecting all of the market indexes to stop rallying and turn down, I think, through the month of September into October. October has produced a significant buying opportunity, sometimes and relatively often a huge buying opportunity, over 90% of the time since 1997, over 30 years. So I think it's going to happen again. The QQQ 5-minute chart, just chugging its way up. Let's look at the NASDAQ. We did get a buy signal, ER green daily buy signal on the QQQ September contract, August 8th. So that's the E-mini and the NASDAQ. Now, our trailing stop is here, 19,248, give or take a little. And that's our trade line. That's where we got long. That's a current quote, high and last for the trend up, or the rally up. I shouldn't say trend. But we also got a sell signal on the top of the market to the exact day. That sell signal worked fairly well for a couple of days. That one did not, or that one. But that one was a whopper if you got the right kicker in, and I don't have it in there right now. And the right kicker for the long position is doing great. And the NASDAQ detail 5-minute chart, entry time and price, trailing stop, same kicker as what you were looking at back here on the daily data chart. And next chart, YM. At the bottom, we got a bullish engulfing buy signal, and it's doing great. Now, today, we're touching a major bear trend line, the only bear trend line. From the high, which we got a sell signal on July 18th to the exact day. This happens during the day while the signal is developing, or I should say, at the moment the sell signal developed, past tense. So it's not after the fact at all. It's real time. The same for that sell signal on top, the same for that sell signal on the high, the same for that buy signal on the low. These are all 5 of them at major turning points since, what's the date? March. That's just great. The YM has produced outstanding major turning points on most of the turns since March. And we've got the 5-minute chart. Let's go to Russell. We recently had a buy signal. Our trailing sell stop on the new long was obviously a little too tight. And if you loosened it up a lot, we probably could be long still. But I didn't want to suffer through the big correction down, creating a loss at that point after we had a nice profit. So we ended up taking a profit in 24 hours or less. Next, Russell short-term chart. And there's the trade. Time and price entry on the long, trailing stop. Sharp rally caused our stop to accelerate like crazy, as it should have and did, and we took a profit the next day. Now, the bonds came up to major resistance a couple of weeks ago, stopped in overbought conditions, came down close to some support, turned back up a little, did not make a higher high. Dribbled off a little last week on Thursday. Today we're coming back up fairly good. No signals recently. This buy signal worked out okay for a short period. If you loosen the stop, making it a looser, larger kicker, we probably could make it survive this sizable correction, but I didn't want to do that. My technique is generally scalping and swing trading, although the strategy can be easily adjusted for investor type or long-term type signals, as well as short-term, meaning scalps or swing trades. So, opinion. I think bonds have a very good chance of swinging back and forth without making any more new highs since the high on August 5th, and coming back down into the month of October, left to right, top to bottom, approximately 120 back down to maybe 116.5. That's the range I'm looking for during October for a major low to develop and another huge multi-month move up after that. This would be basically a test of what I believe to be the first shoulder low. Let's draw this in real quick. I'm going to make my little marker here, which is classically what I've been doing to detail the shoulders on a head and shoulder bottom as well as the head of the formation. So that would be the best timing point for the shoulder, but I'll leave the middle there. That I have to include as part of it, and actually something like that. So the bottom is about the right timing point because it's about the same amount of time from the first shoulder to the head of the formation and then from the head to the second shoulder. The second shoulder, the last shoulder, is kind of sloppy in terms of exactly where you want to pinpoint the bottom, except of course the lowest low. But that was around a month or so too earlier than expected. Nevertheless, it's still there. The body parts are still here. They're not as symmetrical as I would have liked. The neckline can easily be drawn. We broke through it, broke out, tested it, rallied up, had a retracement, and now are we on our way back up to new highs to the objective right away to 140 or 130? Yeah, 140. I think there's a good chance that we could fiddle around in here and come down one more time, in which case that low we may have again in October, this coming October, in approximately 6 weeks or so, could cause me to believe that this activity is the first shoulder low. If that's true, then the neckline is going to be elevated so that it's not here, it's across that high instead of the one we've got right now, which is across these prices, which is fine. In either case, this one's developed, working so far, fine, and that would be the test of this smaller head and shoulder bottom neckline, the lows in October, again, a little under 120 to down to about 116. But they would be a larger formation in a large formation. Kind of weird, but I have to say so before it happens. Otherwise, you won't believe I see it in advance. 10-year notes is the same thing. Here's October. Here's the price range I'm looking for it to come down to. Okay, so notes and bonds are very, very similar these days. Next, crude oil. Dropping off sharply today. Tested resistance. Nice break. At some support, but not oversold at all. Bull trend line was tested a couple of weeks ago, and that's going off the low made in 2023 and the low that was made in December of 2023. So that long-term bull trend line looks like it's holding fairly well, and I'm expecting it to be tested. For the moment, there's a slim chance we could have a little bit of a bounce, but I don't give a lot of credence to this support line. It looks reasonably good. It's across a variety of lows. It behaved okay right there at an oversold condition, bounced for a couple of days, but then it kind of didn't do a damn thing right here. Will it bounce off of it again today? Good question. Watch carefully. Not a signal. We're not overbought or oversold. So it's just an opinion about a little bit of a bounce. What about natural gas? Well, now I have put some markers in. That's a possible shoulder low. Oversold, rallied. New low, got oversold again, rallied up to almost exactly the same price, just a few ticks less than the first rally high. Those 2 points could be, I think are marking the pivot points for the neckline. Today, we have a bullish engulfing. We're not overbought or oversold, so it's not turning green or red. It would have been nice if it turned green. So be it. Bullish engulfings lead to rallies frequently. This looks like it should be the last shoulder low. Timing is approximately correct. I measure again from the date of the first shoulder to the date of the head. How many days, minutes, hours, whatever, time, and now measure the same distance to the right. And I actually could use a couple more days to the 21st. Looks like 3 more days, a little later this week. If we do have a little bit lower low, it won't break the pattern. It'll just develop the shoulder a little more accurately timing wise. But because of the fact that we have a bullish engulfing, it leads me to believe the shoulder is happening now and a little bit closer in time than one would have normally suspected. These timing things are not super accurate. It's just that head and shoulder patterns have a lot of symmetry involved historically. The distance from the amount of time from the first shoulder to the head is frequently very close to the amount of time from the head to the last shoulder, which could afford to be a couple of days from now. The neckline is going to be the same. It's just a little bit more dribbled down, maybe just a little sideways and then up more. Keep your eye on these natural gas prices. Heating oil down sharply, getting kind of low 31, but I like 25, remember, for oversold, not Wells Wilder's old 70 and 30, using a 14-day look back on old daily data charts. That's all he had. That's all I had in the 1971 through late 1980s when the internet became usable and we started to get real-time quotes or short-term data from some mainframe, maybe after the fact for research purposes. So, probable test of support coming up. We'll see if it bottoms out in the next few days. Gold. New high, but opened at its high, a new high ground, and sank to the low of the wick and has come back so far, but not made a new high. And it's just a little bit above that trend line. If this closes below the trend line and closes lower than yesterday's close, and it's not up very much, I would say today would be a high. That hasn't happened yet. So far, we're above the bearish resistance line, and we're hanging in there barely. This needs to be watched very carefully all the way to the close and see what it ends up closing at, because a close below yesterday's close could indicate the beginning of a move down. And look how close we have been to RSI overbought, 74.8. Super close. So it's almost yellow. Gold is ready to turn down, I think. Silver, pardon my cough, rallying a little more, could maybe rally some more, but getting up there, RSI 67, not quite as high as I like for a little more convincing likelihood to turn down. We did get a buy signal at the bottom of the break in support in oversold conditions, just great. And we got another one a couple days later. So we caught the bottom. Now, unfortunately, we never got a sell signal in the shoulder, the head of the shoulder. Darn cough. We have a small head and shoulder top as the last shoulder on the larger head and shoulder top. And it's working so far great. Not surprised about this rally. Remember, we had 2 oversold conditions on the way down. Finally, support, turned it up, buy signal, made some money, not a problem. When is it going to stop rallying? I think very soon, and I'm supposed to get down to 24 at a minimum or lower to fulfill the head and shoulder top downside objective. And I would love to get a sell signal here in the next few days in overbought condition for predicting the next move down, probably to the minimum downside objective. Sorry about that. So now, platinum, same series of formations, very unusual. Not quite overbought, not even close. Stalling out a little bit. Downside objective is down here at 808. I think it's going to challenge support the previous lows soon. Drop to the bottom of this support area at 892-ish, 3-ish. and break it and go down to my minimum objective again, about 808. Looking for more downside. I'd love to get a minimum of a bearish engulfing, hopefully a red one, because we were also overbought, but I don't know if we're going to get enough strength to get into overbought conditions. And let me extend this trend line a little further. That should have been a different kind of a trend line, but it's okay. And there we go. So the neckline is not even in jeopardy until you get all the way to 1014. And we're at 962.80. So plenty of elbow room in order to get overbought. I just don't expect it. But no signal, so I'm not doing anything. Next, high grade. 2 buy signals recently. New high for the move up since both buy signals. We are long from the last one, ER1, and it's been a couple of days. It was just last Thursday. The trailing stop might be tightened a little bit, but we are now protecting a profit, so I'm going to leave it alone. You got to give it some elbow room, or sometimes you get your stop too close and you get bumped out of the trade for no good reason. And a day, an hour, or a week later, you go, oh man, I wish I wasn't out. Don't cry over spilt milk. If you make a profitable trade, you make a profitable trade and keep those losses as small as possible. So limit your losses and let your profits run. It's my mantra, my logo. That's what I live by. Next, grains. Almost a new low. Opened on its low, almost a new low, not quite. Oversold means we're probably going to have a rally of some sort. Now, although it's up there pretty good, you can't rule it out. My first little spot's going to be about 1015, and I wouldn't be surprised to see 1037. Now, it's quite a bit of a stretch in order to get all the way back up to 1105, but somewhere, somehow, along the line, this market's got to bottom out. It just keeps getting cheaper and cheaper and cheaper. I'm still basically bearish, but I'm looking for a short-term rally up to the numbers I just gave you. And that's the same thing basically for the other grains. Oversold soybean oil. Today, we're finally showing some bouncing ability. We got a high higher than Friday, and we got a high higher than last Thursday. Yeah, a good start. Where's it going to go? Minimum 4180, probable 4250, and maybe even more. Those are the major resistance areas. Next, soybean meal bouncing off support and oversold conditions. Perfect test, by the way, early last week. Looks like Tuesday, Wednesday. Today, almost a new rally high since the oversold test of support. Where's it going to go? Well, I think this is too close. 311, 312. So that's easy. Then probably next up to 324-ish. But going all the way up to 338, 339 does break a bear trend line, which it don't want. So the lower 330s. Next, corn. Almost a new low, almost at the bottom of support, not quite oversold, super close. I have to point out that we have had 3 buy signals in the last approximate month. That does cause me some implications, but it's not an official signal. That one didn't work. This one did create a very minor loss and could have made some money. Just the stop wasn't tight enough, quick enough, but you can do that. And this signal probably created the opportunity for a very small profit also. Not going to go into super detail on my YouTube here. But I think this is bottoming out short term to intermediate, and we could easily bounce up to 394. So not necessarily new lows coming up, but probably a little bit of a rally. Next, wheat. Now, this is a new low for wheat. Our last buy signal has not been violated, but it already got out of the trade. We have had 4 buy signals since July 19th, a couple of months. So far, there's been new low since our lowest buy signal, and that was on July 31st, almost the bottom of the market. Nothing bullish has really kicked in and stayed that way. I think it's about to turn back up. I'm not getting any solid evidence of it yet. It's a hunch, so to speak, educated guess. Not too much more to say. Waiting for something new. But basically bearish in grains overall. But short term, again, a few buy signals. Cattle, looking good. Was I talking wheat here? Yeah, that was wheat. Good. Cattle, between a rock and a hard spot, trying to break below this bull trend line again. Tried a few times. Friday, it closed right on the line after breaking it. Now we're seen to be getting below the line on the opening and now popping back up above it again. So far the line is holding okay. I'm actually going to change this. I'm going to drop the line so that I'm coming across that point right there. Now that looks a little more relevant because that's a perfect touch and that is closer. Okay, one line or the other, the one I had before, they seem to be hanging in there and causing support. So short-term rally up to 182 and a half, 184 and a half, maybe a little higher. And Miss Piggy, not quite an engulfing, the low isn't low enough. Rally high at the moment and a minor new high for a couple of weeks, but significant resistance. Not overbought at 60. So it could very well come up challenging the high made a few weeks ago. A little friendly on hogs short term, not quite sure about the longer term situation yet. And back to the E-mini, remember, I'm looking for and not finding it yet, a significant amount of move to the downside to scream bloody murder. The market's topping out. It could work its way a little bit higher for a short period of time. I'm kind of expecting it to top out this week. You guys have a great day. Profitable trading to you.